Good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for Wednesday, the 22nd of June, 2022, getting on to 7:10 p.m. While you're down in the stock indices, you embedded today at the close of business, and this isn't enough to keep them fully embedded. Isn't that interesting? In fact, when you were down 120 points in the Dow, it wasn't enough. Fascinating. That means you got to be careful tomorrow about selling rallies, even though you develop the embedded reading. If you lose the reading, the odds favor you might get a rally. Let's talk a little bit about inflation. Where is it? I want you to look at grain prices just by way of example. They've been crashing. It's going to take for grain prices to go up right now some supply event to happen. In other words, in the U.S., Mother Nature ruining the crops or threatening them. Will we get the threat? You can rest assured we will. Will it be real? Nah, it doesn't have to be. You'll get the threat and that's about it. Bonds and notes. I have been telling you for about a week now, week and a half, you lost your bearish embedded reading. And when that occurs, it sets up a play where price tries to rally to the 18-day average of closes. That is exactly what is going on at this point in time, and you're just about there. Bitcoin, still under the influence of having a bearish embedded reading. The metal markets, go to my metals update and read those. I think you'll like what you see. And in the currency markets, sort of treading water right now. Now, before I get too far, hit the subscribe button on this. Sometimes I'm unable to immediately send out the email, but when you hit subscribe on YouTube, you're going to get notice right away that I've done the posting and you'll always have it. So please do that and remind yourself of that. In the S&P, does this look like a bull market to you? Not to me. And by the way, it's not a transition market. It's a bear market. And the hardest thing that you probably have understanding is how to trade a bear market. I've done this I was just counting it up, 53 years I've been a registered broker. I've been trading before I was a registered broker. And I know how to play bear markets. I've been around them. I've seen them. Most people haven't the slightest darn idea, and they get stepped on. You know why? Instead of trying to sell the rallies in them, they're trying to buy the break because they're used to, over the past decade, buying the break and getting rewarded as the market was over the 18-week average of closes. It's under it. You've fallen too much to say it's just a correction. The game has changed. Change with it. When I look at this chart, we've had a nice break to the downside and we've gone into a pause. That's what you're doing right through here. Not a lot of volatility, gotten quiet. The pattern is one, clearly, of lower highs, lower lows. That is bearish. The market is well under the 18-day average, which happens to be under the 100, which is under the 200. Classic bear setup, market down. So I've got a trend down, the bias down. The market has been paying excellent attention to the lower Bollinger Band, and when it's been hitting it, it's been finding support against it. The resistance on the rallies is there, and the support on the breaks is there. Just the other day, I was saying, don't get short under the Bollinger Band. You're going to have a better opportunity, and you most certainly did. Now, let's put the momentum on this chart, and here's what bothers me. You have an embedded reading. Let's take a look, and let me explain this to you. Here is the close of business today, Wednesday. Both numbers under 20, both under 20, both under 20 as of Friday. So now we get over to where we're at right now. This is Thursday. The market sitting here down 10 points in the S&P, and you're barely holding on to being embedded. Any number under 20, you're not there. If you get a rally to go short, which is how I would be playing this market because it was embedded, you won't be embedded at that point. I got to walk away from that thought tonight. Exactly what I'm doing. In fact, if anything, a reversal and a higher close tomorrow might set up the rally back to the 39.40 zone. a surprise. I didn't expect to say that tonight, but that's just what this market is doing as we're talking. When I come to the Nasdaq, I've got the same pattern, lower lows, lower highs, but it refuses to embed. So the trend is down, the bias is down, the resistance 12,060. It doesn't look like a market that wants to catch on fire and break down for a new low. In the Dow, let's take a look here. You've got a number 2066. Let's go away from that and go to the close of business Wednesday. Both numbers were under 20 again. Day before, both under 20. Day before, both under 20. So we embedded. So here we are early in the evening tonight. The market is down 46 points and losing the embedded reading. And when you embed, you're looking for a rally to go short. The market is saying don't do that. Fascinating. I don't get a lot of these to explain that way as they're developing, but that's just where we're at this point in time. The Russell never did embed. It's oversold in a downtrend. They can all drift lower, but they're not going to give you an opportunity on rallies that make sense, in my opinion, to go short. And in the VIX, we've got the lower highs, lower lows, and the market acts like it wants to go back into this zone, the 2784, 2689, which is the support of the 18 and the 100-day averages, while the trend is down. So you've got the bias up, but the trend down and momentum down. In other words, the stock market's not telling you to do a darn thing. What was I looking for from the moment that you lost the embedded reading right here? For a challenge of the 18-day average. Now, I know that I came out just about 72 hours ago and said, what will happen is the way it's going, you're going to have to drop the 18-day average. This is what I thought would happen, and price would just be able to drift up. Instead, prices have kicked a bit to the upside. They've gotten there, and now you're totally neutral on this particular chart at this point in time. You're about to hit that in the 10-year note. Here you lost the embedded reading when the red line got over 20 on a close, called for the move back to the 18-day average, and you got it. Go to your 5-year note. You'll see that too. In the dollar index, while the trend is down, you're above the 18-day average. I don't want to fight with that. That's all I'm looking for. I'll wait. If it can stay under it, then we might get new bear signals, but not here. You got a reason not to be long, but no reason to be short. And you got the flip-flop in the eurocurrency. Now, one of the things I've been looking to see, are the foreign currencies going to get strong enough to give you buy signals against the dollar? People aren't talking about that, but I want to. I see bank after bank after bank going to raise interest rates. Have we gotten to the point where we've built it in and the new boys on the block, the European Central Bank, other central banks, start taking the leadership role and markets start clearing that and get bullish against the dollar? It's a thought. You're not there yet, though. British pound, trend down, momentum up, bias down. The bears have the control until you get back over 123.45. Target 120.24, but I hate that momentum isn't pointing down with the market. In Bitcoin, I remain fully in the bear camp. This is still very bearish. I think rallies, as long as you don't take out today's low, and that low, just so we can look at it. Oops, didn't mean to do that. I'm still learning this technique. Let me grab this back here. Here we go. And the low in this chart, let's get to it today, was 19,750. So until that is taken out, I think any rallies you get in the market are the selling opportunity, and I think the trade is still targeting, at this point at least, the 17,000 level in the market. When I look at the Brent versus WTI, you can see how the market's picking up. And I know our president's going hat in hand, begging the Saudis and others to produce oil. Are you bothering to look at the back end, not the lead contracts of oil? This market's backwardation, the front months are where the price is. The back months are much weaker. There's a problem there. The market's anticipating weakness. The OPEC countries aren't stupid. They're not going to keep producing oil They're going to maintain what they have to get the best price for themselves. The heck with us. Expect that to be what this all turns out to be. Do you go short under Bollinger Bands ever? Let me give you the word. Starts with an N. Never. Momentum down, oversold. You might get into the 103.90 to that level. I don't think so, but you could. I think you're getting overdone to the downside. The same thing in the WTI. Gasoline is oversold. It doesn't lift. The futures don't go anywhere. And our president is going to Congress asking for you to get an 18-cent break on gasoline, about 24 cents a gallon on diesel. Is Congress going to give it? I say no. They realize it's a political ploy for 90 days. It changes nothing. And what makes you think that money's not going to just keep energy high? Increased demand for gasoline, because you're removing that tax, will do what? Support the market. Won't weaken this market. It'll support it. I've got my doubts about all this. I think that the market's got to let the market forces take care of it. I even heard that President Biden's got our energy secretary discussing using a law to force U.S. refiners to produce more and to cap exports in some manner. Okay, can you imagine every country that will hate us when we stop our exports, be it of gasoline and other products? I know that it's better for us if we keep it. I know what it'll do in the world, and there's a big picture here. Mexico's already going down that route starting next year. Natural gas, you don't want to press this market beyond the 100-day average and right there. You've broken the back. You've taken the market down. I know this, people aren't paying attention. Almost $3. Yeah, almost $3. You've taken this market down. You're now to a zone that makes sense. It's not going to improve the supply-demand picture. This market broke once we stopped that 16% of all of exports couldn't leave the U.S. because of the damage that was done at the Freeport refinery. Actually, terminal is the right word. And once that happened and they found out it wasn't a quick fix, that broke the back of the market. Okay. But as I said, I'm not seeing the inflation pressures. Everything you and I just went through, where's all the inflation with that? And that's what bothers me. I'm just not seeing all that inflation. And unless I get to see it, let's see if I get this to come up for us. And there it is. This will bring it up right now. You want to learn. You want to take this opportunity to take a moment out. And that's what I've done. I tell you what, I've got my clients that pay me a lot of money for my advice. I've got them pretty much in cash right now. I'm looking for trades. They're not there. And I won't be pushed into them. But I teach all this. I teach that you don't get pushed into anything. Charts are tea leaves. You do know that, right? I mean, you can talk the fundamentals till you're blue in the face, but when you read a chart, you're as good as how you read that chart. I'm pretty good at it. And what I tell people is don't be forced that you got to do something every day. You don't. You don't need to do it every week. You'll get the trades. They come fast. They come furious. I'm forever saying on the phone when I'm talking to my subscribers, hey, get your money ready. I can see it. We're going to be one after the other. And then the trades come. If you don't have the money in the account, you got a problem because I might throw out, who knows, there could be all of a sudden 10 trades at you like that. That's how they come. They come in a rash. Be ready for it. Get our futures kit. Take my free sampling of what I do. How do you get this? Take your cursor, move it up to the top here for the free offers. Take advantage of them. Now remember, hit the subscribe button on YouTube so that if we don't get out an update on time, you get it as soon as it's ready. I'm Ira Epstein. You have a good day.